Alright, we're going to do a quick video on algorithmic trading, and stick with me to the very end and we'll show you how to get these prices listed here on this screen for yourself for free every morning before 7 a.m. That's every weekday morning before 7 a.m. No credit card required. We'll show you how to do that at the end. Let's get started with a brief discussion about algorithmic trading. You can see on this screen to the right, to the left side, you can see we have the tickers, and we're going to start with stocks. And then over here to the right, we have our holding periods. And then we have our recommended reference points, which would be where you would consider entering. Now, it's important just to understand the layout of this table, because it's going to be a layout like this that you want to think about first when you're thinking about algorithmic trading. This table is an output from an algorithm. An algorithm is simply a mathematical formula that calculates something. Each one of these outputs here, including this 0, including this 1958 and so forth, these are all outputs from an algorithmic formula. And they're programmed using data that you get from the markets, and you input that data and you output your results. In this case, the results are exact entry prices. Now, for the purposes of this discussion, we're going to call them reference points. You should never rely on anything you see on any computer screen as an absolute way to trade. You have to always use your own judgment. But for the purposes of this, we're going to call them recommended reference points. When you look at this, you're basically taking the data you get from Apple, building an algorithm, and outputting a recommended point to consider entering, in this case, a stock. Now, at the top here, these hold periods are critical. When you're discussing how to build an algorithm, you have to first determine quite a few different things. For example, what are we going to trade? In this case, we're trading stocks. How long are we going to hold it? Because an algorithm can't be tested unless you back test it. And you can't back test an algorithm unless you make basic assumptions. The first basic assumption is, what are we going to trade? So this is a stock. Another basic assumption would be, how long are we going to hold it? Holding periods are critical. The instruments you're going to trade is critical. If you're trading instruments that aren't liquid enough, you're not going to get data you can use to build reliable indicators. Now, that's not a problem if you stick with most active stocks and most active futures and the major currencies, but it can definitely be a problem if you're trying to model exotic instruments. It's also a problem if you can't get data. You cannot build a reliable algorithm without reliable, sound data. So the most important thing at the beginning of algorithm construction is ask yourself a question. Can I get the data that I need to backtest? Because ultimately we're only relying, to the extent that we do, on the results of an algorithm because we thoroughly backtested it. Now, as we all know, past performance is no predictor of the future, or at least not necessarily a predictor of the future. But what we're relying on is statistical relationships. And the statistical relationships may or may not hold up into the future. But in my opinion, it's better to do it that way than it is to guess. Can you make money with technical analysis? Yes. Can you make money with fundamental analysis? Yes. But you will spend your life doing that. You will spend your life studying those charts late at night. And you will still not be able to point to a chart the next morning and tell me exactly where you're going to buy with statistical certainty. You're still going to be guessing. But with algorithms, you can open up this program and look and see this Concept Therapeutics recommended buy price for tomorrow is $19.58. You cannot do that with technical analysis, and you can't do it with fundamental analysis. Not with statistical certainty. Again, not a certainty that you're going to make a profit, but with a back-tested statistical historical record that you can look at and determine for yourself whether or not you want to follow in the future. That's the beauty of algorithmic trading. It's essentially scientific. The other beauty of it is, once you build your algorithm, which might take you an hour or it might take you 10 years, once you build your algorithm, you just put the data in it at the end of the trading day, and it spits out your reference points. There's no hours and hours and hours of study at night when you're using algorithmic trading. And in fact, you can program algorithms to trade in real time. These algorithms that I'm going to show you on this page the algorithms that generated these prices did all of this work in less than an hour. That was not an hour of computer time. That was an hour of inputting the data, formatting it, doing all the work required. The algorithm took seconds. So when you compare that to the amount of time you might spend putting together a technical analysis trade for the next day or a fundamental analysis for the next week or the next month, it's obvious that the benefits of algorithmic trading in terms of saving you time are enormous. Essentially, you're going to save a lifetime of analysis if you use algorithmic trading. You do not have to use trading algorithms to replace technical and fundamental analysis. You can use them as a backup. You can use them as a secondary tool. I recommend that if you're looking at RBAM Research, you never use them as your primary method of entry, but you use them as a reference tool to compare or to perhaps fine-tune your anticipated trade that you've come up with fundamentally or technically. There's nothing the matter with fundamental and technical analysis, but it's just extremely time-consuming, and there's a lot of art to it. An algorithm has no art. You build the algorithm, and the results come out statistically. There's no art at all. I would say that there is probably some art and certainly some creativity in coming up with an algorithm. And again, as I said, that could take you an hour, could take you 10 years. But once you have a functioning algorithm that you've back-tested and you like the way you like the results that you get, you're pretty much done with analyzing the market in terms of that algorithmic output. So let's take a look down here and see exactly what you can do with an algorithm. All of these prices that you see in these columns are from an algorithm. And we're going to show you some stocks at the beginning here. You can see zeros simply mean there was no price generated for that day. These are all going to be buys only for stocks. And you can see we list about 10 or 12 of them. We have 190 plus stocks covered on our rbamresearch.com website. Now let's move down here to S&P 500. It is absolutely incredible what you can do if you model the S&P 500, the E-mini futures with algorithms. A lot of guys are doing it. It's incredible. Even if you didn't trade, it's an incredible study in statistics. You can see this particular day. All of these are specific. They're time specific for a day. These are for May 24th, and they expire on May 24th. But if you take a look at this, recommended short for the one-day hold is none. And then it goes down the line here with prices from 2 to 20-day holds. Crude oil, these again, crude oil futures. These are some of the most liquid futures contracts in the world. And you can see the same thing. It's recommending a short and the various prices and hold. Gold, same thing, only it's recommending a buy today and the various buy prices. And finally, treasury bonds. These are in 30 seconds, 138 and 23/30 seconds, recommending buys today. You go down here to cash forex. This is just a straight cash interbank forex markets, and you'll see recommended buys and shorts. All of these coming out of algorithms and coming out of it calculated in minutes. For this entire page can be generated. Once you input the data, this entire page can be generated as far as the data is concerned in minutes. Finally, down here we have Bitcoin. Now, the one thing that I want to point out before we go to the bottom here is you'll notice the extreme amount of diversity of instruments that are covered on this page. You would have to have a room full of analysts to come up with these prices for you every morning at 7 a.m. if you were using technical or fundamental analysis. You might be able to follow one market or two markets, but there's no way you could follow these major liquid markets by yourself, especially 190 stocks and so forth, all the major currency pairs. It just would not be possible. And that's another major and final benefit today that I'm going to discuss about algorithms. It enables you to have a grasp of the market and an action plan every morning for the market that you just could never, in my opinion, get from fundamental or technical analysis. And again, there's nothing the matter with fundamental technical analysis, but the amount of time is basically all-consuming. If you're interested in learning more, and especially getting these prices every morning by 7 a.m. for free, you can do that at rbamresearch.com. Before we go to the bottom of this, let me remind you that all of these prices, everything on this page is for entertainment purposes only. You definitely trade at your own risk. You should never use any of these prices, these recommended reference points, as a sole means to entering the market. You should always consult a financial advisor if you feel you need one. Again, 190 stocks. the major forex pairs, crypto, the most liquid futures, all available by 7 a.m. every weekday morning at rbamresearch.com. If you like this video, please click the like button. If you want to subscribe, please do that. And again, not to be repetitive, for entertainment purposes only, and you definitely trade at your own risk. Come by rbamresearch.com to get free algo pricing every morning and to learn more about algo trading.